John Horner of Deutsche Bank joining us this morning from Sydney. And John, first off, what about the moves right now in Asia-Pacific currencies? What's going on this morning?
Very much a continuation of the slightly better tone to risk we saw at the tail end of last week. Some calming of the extreme volatility we saw in the earlier part of last week, and that's seen the typical beneficiaries of such better risk sentiment, the Australian dollar, New Zealand dollar, doing somewhat better, particularly given we've got through a weekend without there being any negative news, which makes for a change after some of the weekend volatility we've seen in recent weeks.
Now, John, is this more about Aussie dollar strength and Kiwi dollar strength, or is this more about dollar weakness at this point?
I think it's a combination of both, and we continue to see the US dollar still, for the large part, trading as a risk-off beneficiary, risk-on sentiment tending to hurt it. Even when we got the downgrade at the beginning of last week, that was still very much the dominant influence. So as risk sentiment has improved towards the tail end of last week and into this week, that is weighing on the dollar, particularly against those typical beneficiaries like the dollar block currencies.
Okay, well, let's talk about levels for the Australian dollar. We're looking at 104 and change and seeing gains so far this morning. Now, interestingly enough, you have a bearish view on the Australian dollar. You think it might actually retest 98 cents?
The key question in coming weeks is going to be about the global data flow. If the global data flow improves and lightens some of the recessionary risks that people currently see, then we can go up from here. But if the data is as soft as things like the consumer sentiment numbers in the US on Friday indicate, then a test to the downside very much comes onto the card. A retest of this year's lows below 98 cents would seem likely. So we're going to be paying very close attention to the weekly numbers as they come out in the near term.
Okay, so in layman's terms then, John, in order to retest 98 cents, don't we need basically a double dip in the U.S.?
We certainly need indications that that's where we're going, or at least an increase in fears that that's where we're going. So we'll be paying particularly close attention to things like the weekly jobless claims numbers on Thursday. They have been showing an improving trend in recent weeks. If that was to halt and reverse, the risks of a double dip in the US economy would be considerably larger, and in that sort of environment we would expect the Aussie dollar to come under renewed downward pressure, with a retest of those levels mentioned earlier very much becoming central case.
Hey, do you have any views on the Kiwi dollar? Because during the turmoil we saw last week, or the last basically 2 weeks, the Kiwi dollar probably was the hardest hit currencies in the G10.
There had been an expectation building, including by us, that the Reserve Bank of New Zealand was likely to take back its emergency cut from earlier this year. However, given the extreme market volatility we've seen over the past couple of weeks, that now seems unlikely. Expectations now the RBNZ will be on hold for coming months, and that's something that's also weighing on the New Zealand dollar, as well as the market volatility and the risk-off nature of that currency. We don't think expectations of an RBNZ hike are going to come back anytime soon, and that's probably going to stop the New Zealand dollar rallying too hard from here, or certainly outperforming from here.
Okay, John, what's the best bet in the currency markets?
At the moment, we continue to like the Japanese yen, even with all the talk of intervention and the heightened scrutiny it's getting from Japanese policymakers. We continue to see the gravitational pull of Japan's current account surpluses leading it towards a further strength, and we do see a move higher on the yen, move lower in dollar yen as still central case despite the intervention concerns.
Okay, give me levels though, John. How strong will the yen get?
We think 75 will be seen on this move. Moves beyond that will depend as to the state of the US dollar beyond that. But we've had 75 target for some time and still think that level is likely to be tested before the down move is complete.
All right, John, thanks for your time this morning. John Horner of Deutsche Bank joining us from Sydney.